Let's talk about this holiday season as you see it shaping up. Does it speak to the idea that the American consumer can still power the American economy?
Hey, good morning, Dom. Great to be with you. Yeah, this is an exciting time. It's really sort of a track meet at this stage. This year, particularly with the way the calendar falls, there's a week shorter between Thanksgiving and Christmas. So, with the kickoff on Thanksgiving and the end of the game at Christmas, the question is, can the consumer and the retailers process all the transactions they need to get that 2 to 3% growth that the Retail Federation is calling for? That's what's happening right now. How do we get the consumers out? And then how do you process the orders and keep the product flowing to the stores in that compressed time period?
During that compressed time period, there's also an interesting mix developing with where certain people are shopping. Some lines have been blurred, especially when it comes to the income spectrum and who prefers to shop where. What exactly are you seeing? Is there still a trend in place right now, and how strong could it be next year that we do see many parts of the income spectrum gravitating more towards that kind of value-oriented transaction and outlet? And if Walmart does benefit and others like those big box stores?
Yeah, with the price inflation, really severe inflation that we went through for the 18 months or so, price inflation is abated, as you know, meaning prices are not going up as fast as they were, but they're not coming down. They're sort of sticky at the top, and there's been a trade down. Walmart's reported that for several quarters now, where they're getting higher end consumers, $100,000 plus earners into their stores. And typically those folks don't stick at Walmart. They stay as long as the distress lasts, and then they go back to where they were shopping. When there's a trade down, each economic sector trades down to the next department stores, into the discount stores, and discount stores to the dollar stores. And the odd man out at the end is the lower end consumer, because they really don't have anywhere to trade down to. Prices at the dollar stores and convenience stores have also gone up, and the lower end consumer's income has also been restricted. So they're the ones who suffer on the bottom end of the economy.
Bill, speaking of the inflation story and everything else, there's a real question developing on certain parts of both Wall Street and Main Street with regard to what hypothetical tariff policy can do to prices for the U.S. consumer. As a former executive at one of the biggest, if not the biggest retailer in the world, who pays tariffs and how do the mechanics work?
Well, it depends. In the end, the consumer decides whether there's a tariff or there isn't a tariff, because the cost of the tariff gets added into the price of the product that the consumer either buys or they don't buy. We're in the very, very early stages of a tariff war, tariff discussion. The first stage we're experiencing is the threat of a tariff. I'm going to put a tariff on Mexico. I'm going to put a tariff on these products. There's a response from the people who are getting tariffed. They either compromise or they put a retaliatory tariff on, and then there's discussion. And in the end, whether the tariff gets accepted or not, determined by the consumer. If there's a tariff on Mexico and avocados and tequila get priced up because of a tariff, the consumer decides whether they're going to have guacamole or queso with their chips when they go to a Mexican restaurant, or they decide whether they're going to have a margarita with tequila or a mojito with rum. And the consumer makes the ultimate decision, because, of course, they'll pay for the added cost.